Greetings, my name is Barbara E. Ringrose. I'm the founder of WOW, Women Optimizing Women, here in Carroll County, Maryland. Today we are doing an interview, and I would like for you to take a look at what WOW does on our website at wowwomenus.com. Take a look at the membership. You will see our membership has grown truly in diversity, and when I say that, I mean from young ladies outside of high school all the way up to retirement age and occupation socioeconomic level. And also we are now focused on migrating across the country, not just here locally, because after all, technology has taught us that we can be local as we work together and meet one another. In-person networking, virtual networking, that's what WOW is all about. So today I would like to introduce you to our guest, who is Deanna Furman. Deanna Furman is a senior mortgage loan officer, which is a profession that is near and dear to my heart. And she is with Fulton Bank. And she's going to tell you a little bit about herself, as well as probably a lot about mortgage lending and things you may need to discuss with her in the future. So Deanna, welcome. It's a pleasure to see you.
Thank you so much. Thank you for having me today.
Definitely. What can you tell us about mortgage? Maybe before we get into that, how about what can you tell us about you, Deanna? And how in the world did you get here from there?
So it's a funny story. I started in the industry in 2002 after graduating from college at the University of Maryland.
Mm-hmm.
And my major was communication and public relations. So for my internship senior year, I interned for the director of public affairs at a think tank. And I thought to myself, this is interesting, but I don't see myself doing this. And so as a result, I honestly fell into mortgage. For the first 5 years of my career, I dabbled a little bit with the title side of things, worked for a small mortgage brokerage in Columbia that was veteran owned, and all we did were streamline interest rate reduction loans. Everything was on paper. I traveled to the client's house and met with them face to face. So a lot of things have changed in the industry since back then. But yeah, that's basically how I got into mortgage.
So you're not unusual in that I graduated with a biology degree and started working on my master's in counseling and was 2/3 of the way through before I met with a career advisor who said, you're a mortgage loan officer.
She saw it right then and there.
Yes. And that's interesting. And I kind of fell into it much like you did. So sometimes it's not necessarily the profession that we think we're going towards or the education that we think will link us to our future occupation. It's just something like what you experienced.
A lot of it can be personality too, because I find that in the mortgage industry, you have to have integrity, you have to be dedicated. Oftentimes you have to be aggressive while very detail oriented and personable.
Right. And you have all of those characteristics. I have not known you for a very long time, but it didn't take me long to discover that about you.
Well, thank you.
Most definitely. So we know now how you got here. Mm-hmm. So talk to us about mortgage, where you're saying, here it is, we're going into the final quarter 2024 here. And I just went to a economic meeting with the local chamber and the forecast on what the future looks like. Talk to us about what you're experiencing, what you have experiencing compared to maybe what you think is going to happen in the future with mortgage.
Absolutely. So a lot of things changed the second half of last year when mortgage rates started increasing on a rather dramatic scale. And there have been challenges with inventory. There aren't enough houses for sale currently. That's a result of a lot of people sitting at interest rates 3% or below that just simply don't want to lose that monthly payment. There are a lot of people in the millennial sector where they're coming of age, they're at the age where they want to buy a house. There are simply too many people versus the amount of inventory there is. With the interest rates having gone up and the inventory shortage, prices continue to go up, which has created an affordability challenge as well. There are still people out there looking to buy homes, however, and so what I've been seeing is, a lot of first-time home buyers, a lot of repeat buyers, a lot of people that are not necessarily first-time home buyers, but they've been renting for a while and they realize from a tax advantage standpoint and to gain equity, they really do want to buy.
Okay, so in the past, we've seen, as you mentioned, really low rates, and I was part of that environment when I decided to get out of mortgage. And I can only say, through my personal experience, which was in 1985 when I bought here in Carroll County, the interest rate that I got was an FHA 14.5% loan.
Sure.
I can also tell you that things have just changed so dramatically over time. The one thing that is consistent is change, and I do feel whatever goes up must come down. And we saw in the beginning of 2000, the rates were right hovering around 8%.
Yeah.
What's the difference? Because now we're at 8% now, basically.
Basically, yeah.
And we were at 8% 23 years ago. What are the differences between those two time periods?
Well, people are making more money now than they were then. Home prices are also higher than they were then. But if you look at the numbers, I believe there are a lot of economists out there that believe that, the amount of income, the higher incomes that people have, it's pretty comparable, all things considered.
Okay. Do you think that they have more debt in comparison to where they were in, using this example?
I would agree with that. I would agree with that 100%. At the end of the second quarter, it was announced that consumer and credit card debt is at an all-time high, and it hit over $1 trillion.
Interesting. And that was in my economic meeting today, that we learned that it's over $1 trillion in credit card debt, from what I understand. So that is probably the most significant piece as compared to here versus then, where we were.
Absolutely.
So of course, even though we have escalated pricing, even though we have escalated incomes, we also have that third escalated piece, which is debt. So as a mortgage loan officer, and you then advise your clients, you're working with them for a period of time, I would say, especially when they're buying for a house and the inventory's low, meaning there's not enough properties out there for sale right now. What would you recommend as a mortgage loan officer to our ladies at WOW, and also how they can inform their clients when it comes to this topic of conversation? What would you recommend to them to help people get themselves ready for their purchase?
Well, everybody's situation is different, and I'm not the type of lender that just hands someone a pre-approval letter and says, have fun shopping. So there's a lot of dialogue and conversation behind the entire process, from the initial mortgage consultation to learn about that individual or those individuals' goals, what their budget is, what your timeline is, what areas do you want to be touring homes, is there a specific home style you have in mind. So that preliminary conversation gives me a solid foundation for what the goals are, what the objective is. From there, once the application's submitted, I do create a total cost analysis and generate different loan program options as well as different scenarios. Say, for example, someone says, oh, I want to put 20% down. Well, do you really know the difference between 20, 15, 10, and 5% down, let's say? Would it be better for you to pay off some debts? Sitting at the average credit card debt rate is now 24, 25%.
Oh my goodness.
So would it, so would it benefit you more to pay off that credit card and reduce your down payment? So those are the types of conversations that I'll have with clients once they've submitted the application to get pre-approved. We'll discuss the programs and scenarios so they can let me know what program is going to work best for them, and if they'd rather shift the cash towards eliminating the debt, or even if it's a good time to purchase in the immediate future, or if they'd rather regroup, hold off, address items A, B, C, and or D, and then start the process at a later date.
You know, it's interesting that you mentioned that wait till a later date. And almost hands down, everyone that I consulted with that told me they wanted to wait till a later time. They wanted to have more time to save, etc. What ended up happening when we re-met at a future date, the values went up, which now that could affect their qualifying at a later time.
Absolutely.
That's a real big concern. At least that was my concern, is that's still pretty much what you experienced, that it reduces their purchase power?
It could, yes. I mean, the consensus is that the prices are going to continue to go up. There isn't going to be some sort of crash where the values come down. So if someone's waiting for property values to decline, that's not likely to happen. The other side of it too is, you know, the interest rates, yes, they're higher than what they were. We're probably never going to see a 3% or lower interest rate again for mortgages. But there is speculation that eventually mortgage rates will come down. And so will they come down to 6, maybe 5?
Right.
And if they do, from a numbers standpoint, even if you wait until next year or the year after for a lower mortgage rate, and the prices have still gone up, guess what? Your payment's going to be basically the same.
Exactly. And that's one of the things that I saw over and over again. Somebody saying, I'm going to wait.
Yeah.
I'm going to wait. Almost like you're trying to time the market. And whether that's in the stock market or whether it's in real estate, if you're looking, it's almost like the time is now.
Yes, I tell people it's when you're comfortable. And be payment focused. That's the main thing, if you're comfortable with the monthly mortgage payment.
Right. And how do you know your comfortability? What would you say if I came to you, and let's say I'm coming out of high school, college, and I'm ready, I have my down payment, I'm prepared that way. What comfort level or what criteria do you use for your clients when you advise them?
So in the mortgage world, obviously we're looking at debt to income ratios and do they meet the program guidelines, and DTI guidelines are going to vary based upon credit score, percentage of down payment, and loan program. But what you qualify for versus what you're comfortable with could be two completely different things. So I would recommend starting off with whatever you're paying for rent and then look at numbers from that standpoint. This is what that price point of a home equates to based upon that monthly budget. I did that, as a matter of fact, last night after the event we attended for a potential veteran client, and he told his realtor he wanted his monthly payment to be $2,500 a month, that he wants a single family 4-bedroom 3-bath home somewhere within commutable distance to Washington, D.C. Now, that price point with a VA loan specifically, you would be below $350,000. So going back to your question, I'm sorry to go off on a tangent.
No, that's fine.
Sometimes what people are comfortable with versus what they qualify for are two different things. And then sometimes people need a little bit of perspective as far as what your money is going to get you. And not only look at the monthly payment, but also, is this a realistic expectation from an inventory standpoint?
I'm glad you mentioned that, because if you're looking around the DC area, the Northern Virginia area, pricing there is going to be very, very different than, let's say, if you're looking in the suburbs of Howard County, Carroll County.
Absolutely.
Or rural America, wherever that happens to be. So I want to say, is the commute a realistic expectation? Something that people don't understand, because it all equates to money. So maybe while they're consulting with you, as you're bringing these out to the surface, that people understand, number one, what is most important to me? Because that $2,500 a month payment may sound realistic in the location, and remember, real estate is location, location, location. Perhaps the location that they're selecting isn't quite right. Especially I found that, and I'm sure you may agree with me on here, is that if somebody's a first time home buyer, expectations can be, far different than what the inventory, we're going to use that term.
It's a learning process.
Yes.
It's definitely a learning process, and what I am seeing a lot more of lately is first-time home buyers that are buying with the intention, knowing that they are going to be renting out a room or rooms to friends or colleagues. And so that is something, there is a term referred to as house hacking, which is if you buy a multi-unit property, but it's similar in that respect where you're renting out part of the property to offset the mortgage payment. So I am seeing that help a lot of people nowadays.
Now, but they still have to qualify on their own.
Exactly.
Because of the debt to income ratio that you spoke about a few minutes ago.
Exactly.
So, credit card debt, take a look at their credit card debt. The ladies here at WOW certainly want to refer business to you. And if you can educate them, as you're doing right now, on the things to have maybe a little bit of a conversation with their neighbor or their friend as they're discussing mortgage, as they're getting their information together to send over to you for a referral. So from the ladies of WOW, what are the pieces of information that you would prefer that they have together for that referral? What should that look like? If you could say 3 to 5 things that you may need from them, or is that even necessary?
So anyone that's looking to buy a house, build a house, or potentially refinance for debt consolidation purposes, we would look at, is it worth refinancing, or is an equity line a better option? The basic information is just someone's name, email, and phone number, and a warm email handoff. That way I can schedule a consultation with the client based upon their availability and their schedule.
And that makes sense. So sometimes less is best, because of course we don't want to get into each other's business, confidentiality reasons, or maybe as someone expressed to me last night at the event that you were talking about, they don't want to necessarily share all their personal information with someone.
Right.
They'd rather do it directly with you, and that's understandable. I think all of us would agree there. As far as planning, then you could take them into, and you mentioned multiple different programs that they may qualify for. So it may not be an FHA loan, it may be a conventional loan. There's another topic that I thought that maybe you could educate a little bit about, was mortgage insurance.
Mm-hmm.
That gets confused so many times with other types of insurance.
Yes.
Can you expand a little bit on that?
Absolutely. So mortgage insurance doesn't protect the borrower in any way. It protects the lender in the event that you default on the mortgage. And contrary to popular opinion, mortgage insurance with conventional loans is not for the life of the loan. So with a conventional loan, it just means it's a non-government backed mortgage. If you're putting 20% down, then there's not going to be any private mortgage insurance. The private mortgage insurance comes into play when it's less than 20% down, and the premium is going to vary depending upon, number one, your credit score. So the higher your credit score is, the lower the monthly PMI will be. And then number two, the percentage of down payment. So the more money you put down, the lower the premium will be. And the PMI will fall off automatically when you get to 78% loan to value. So that's conventional financing. Now with FHA loans, FHA is a government-backed loan that only requires 3.5% down. There's an upfront mortgage insurance premium that's financed into the loan. Then there is monthly mortgage insurance. That rate is fixed, it's 0.55%. That is for the life of the loan. So until you refinance the property out of FHA into a conventional loan, let's say, or you sell the property, that mortgage insurance is built in.
That's important. So there's multiple types of insurance for home ownership. There is homeowners insurance.
Correct.
They may have flood insurance. They may have wind hail insurance. They have mortgage insurance, private mortgage insurance, and then also with FHA, that mortgage insurance she referenced was upfront mortgage insurance. that can be added to your actual mortgage loan amount.
Correct.
And you would pay that over time. That isn't something that you would pay separately. So different types of insurances when you do mortgages, and to understand them, and you could go over those in more detail. As far as VA mortgages, you mentioned that. I believe some areas are more specific on that. I remember mortgage insurance. There was also some sort of mortgage insurance associated with VA mortgages. Could you talk about that a little bit?
There's
that gets confused.
There's actually no mortgage insurance on VA home loans. The benefit of having served your country, whether you've been in the reserves for 6 years or active duty or retired from the military, there's no down payment requirement and there's no private mortgage insurance. The interest rates are also typically a little bit lower than the market rate, and they're not as much impacted by your credit score. There is, however, a VA funding fee, which might be what you're thinking of. And the VA funding fee is financed into the loan, although you can pay that out of pocket as part of the closing costs if you wish to do so. But over the years, when comparing the difference in the monthly payment, the vast majority of clients opt to finance it. And the funding fee is paid to the VA. Now, the VA funding fee, the first time that you use your VA home loan benefit, it's 2.15%. Subsequent use is 3.3%. And if you've separated from the military and you're receiving VA disability benefits and you're deemed 10% or more disabled, then you're going to be exempt from that VA funding fee entirely.
I'm glad you explained that, because there's conventional finance, government-backed mortgages, as you discussed. And then between the government-backed mortgages, you must be a veteran and you must have served in the military a period of time. And instead of the mortgage insurance, as with FHA, you have the upfront funding fee.
Correct.
And that can be added to loan amount, much like the FHA mortgage insurance with FHA. And of course, you want to speak with an expert like Deanna, because all of these numbers mean absolutely nothing until you're ready to purchase that property, to get that pre-qualification, pre-approval, the analysis, like you say, the breakdown of what those fees are going to be, and then work with a realtor once they come to you. Then you have plenty of relationships with realtors that if they don't have a realtor in mind, that you can then hand them off to a well-qualified realtor to help them. So it's kind of Deanna's your expert, the one to help you with the mortgage, to help you with the relationship, to help you with all your questions, because she has all your answers. I like that. I like that a lot. So in wrapping up today, Deanna, can you tell our viewers here at WOW, so they can talk about you and what you do? How do you want people to communicate with you, refer business to you? What's the best way for them to get in touch with you?
Well, picking up the phone and calling me. You can always call me. I work 7 days a week, so I'm in the office and I'm on call in the evenings and on the weekends, because quite frankly, that's when people are touring homes most of the time. You can text me or you can email me. Any mortgage questions whatsoever, even if it's, theoretical, you're thinking about buying that second home, but you have no idea where to start, or maybe you want to downsize, or maybe you have a child that's out of college that's thinking about buying, I'm happy to help.
Oh, that's a good one. What's the best phone number for you?
So my telephone number is 240-732-9069.
Excellent. And we will have your information also. We'll put that on for other contact information as needed. Deanna Furman is a senior mortgage loan officer at Fulton Bank here in Maryland. They also can finance not just here in the state of Maryland, but the surrounding states. I believe that was...
So Maryland, DC, Virginia, Pennsylvania, Delaware, and New Jersey.
So great experience, great opportunity to buy now. I always say the time for WOW is now. The time for mortgage and to buy your home is now as well. Barbara E. Ringrose, founder of WOW. Please visit us at wowwomenus.com. Stay well.